If you're a commercial real estate investor, you've probably heard the term triple net lease thrown around like it's the holy grail of passive income. And while yes, triple net or NNN leases can be an incredible tool for predictable, low-touch returns, they are not all created equal. In this video, we're breaking down what a triple net lease really is, why both landlords and tenants love them, and most importantly, what traps to avoid if you want your investment to actually perform the way you expect it to. Let's get into it. A triple net lease, often abbreviated as NNN, is a lease structure where the tenant is responsible for three key expenses in addition to their base rent: property taxes, insurance, and maintenance. So, instead of the landlord covering those expenses, the burden shifts entirely to the tenant. This model is incredibly popular in single-tenant net lease investments. Think Walgreens, Dollar General, or a standalone Starbucks. Why? Because it makes the landlord's income predictable, clean, and hands-off. No surprise tax bills. No emergency roof leaks coming out of your pocket. And ideally, no ongoing headaches. Believe it or not, tenants often like this structure too. Why? Because a NNN lease usually comes with lower base rent compared to a gross lease, since they are taking on the expenses directly. It also gives tenants more control over their space. They're responsible for maintenance, upkeep, and even renovations, which is great for retailers who want consistency in their brand experience across locations. Franchise operators and corporate tenants especially appreciate that autonomy. So when done right, it's a win-win. But, and it's a big but, not all NNN leases are truly triple net. Landlords love NNN leases because there's less operational hassle. You don't have to manage a property manager, track repair requests, or get involved in daily issues. From an investment standpoint, you just collect rent and focus on yield. But here's where it gets tricky. Not every NNN lease is truly triple net. The term NNN gets used loosely, and if you don't read the lease carefully, you might end up with surprise responsibilities. For example, some leases say the tenant covers maintenance, but then carve out exceptions for roof, structure, and foundation. Guess who's paying for those if something fails? You, the landlord. And when a roof replacement can run 6 figures, that's not something you want slipping through the cracks. So, what should you look out for? There are a few red flags you should always check before calling a lease triple net. Vague language. If the lease says something like tenant responsible for maintenance, except as otherwise provided herein, your radar should go up. That exception clause could override the entire net structure. Capital expenditures. Who's responsible for capital repairs or replacements? Many NN leases sneak in language that shifts capex back to the landlord, especially for long-term structural issues. Roof, structure, and foundation carve-outs. This is the big one. Even leases that call themselves absolute net sometimes include carve-outs. If you're not explicitly protected in writing, assume those costs are yours. Tenant quality. Not exactly a lease trap, but equally important. A lease is only as good as the tenant paying it. If they default or go bankrupt, your hands-off asset quickly becomes a problem. In short, read every lease like a skeptic. Audit every clause, and don't assume NNN means zero responsibility. Here's how to protect your investment. Perform a lease audit before closing. Work with an experienced broker and lease analyst. Ideally someone who understands the nuances of retail NNN investments. Ask for a CAM reconciliation history. That will show you what expenses the tenant has actually paid and what might have been missed. Review the insurance clause and structural responsibilities line by line. And if you're ever unsure, bring in an attorney to verify your exposure. I'm not one, so this isn't legal advice, but I've read hundreds of these leases and seen how one misinterpreted clause can cost you dearly. Triple net leases can be powerful tools, but only if you know how to read between the lines. Follow us on Instagram for more real-world lease examples, investor tips, and tools like our free NNN lease audit checklist. And don't forget to hit subscribe for smarter commercial real estate investing simplified.